Hi, in this lesson, I'll be sharing with you exactly how you can validate your entry when trading this year 2025. First of all, we always say that we have our checklist, and the first is for you to determine the trend of the market. When we talk about trend, we are talking about the directional bias. It could be an uptrend, it could be a downtrend, and it can be a no trend at all, which is a ranging and a shopping market. So looking at this, you realize that price is in a typical uptrend. And if you connect your trend line this way, you notice that this is an uptrend. So in this scenario, what will you be doing? In a scenario such as this, you will be looking for only opportunity for you to buy because this is an uptrend. Having done this, you need to identify a specific zone which I called your point of interest. So this point of interest are those zones we are expecting price to pull back to in order for us to make our trading decision. So our point of interest can be our trend line. So this point of interest, there are zones where we expect price to come into. So here is a zone where price came, here is another zone. And you can see that price went all the way to the upside, came back into this zone. And we are discussing how to validate our entry. So when price pull back to this zone, there are multiple confirmation. First, this pullback into this other block is a pullback around the trend line. And aside the fact that it's a pullback around the trend line, look at commodity channel index is crossing from the level of 20 upward. And here is the pullback. We have a pinback candlestick pattern. And that becomes a validation for a buy. So I've taken this price already before and I've taken profit. Having done that, I saw that there's a little pullback. And I am seeing that there are liquidity build up here. So that is why I take this buy again, and I know that price will pull to the upside in order to sweep that liquidity. So how come about this entry? I am still looking for only opportunity to buy. This is my 15-minute time frame. If I have a trend line on 15-minute time frame, the trend line will be connecting this point. So, and here I have another order block. Look at this particular order block. Why do I mark this point as another block? Because based on price movement, I see here as a higher high. And this is a higher low, and this is a higher high. So what happened? Price create a new higher high, pull back into this other block zone. And I spot my commodity channel index, though it is not up to the level of 20, but based on previous experience, I know that there will be a trigger, a positive move in that zone, which I know that most of the time from the level of 30, 20 and 10 of the CCI, there is a tendency of reversal. So I make that entry, and that is how I come in. I did not just make the entry just because price is in the other block. I wait to see a bullish price signal because I want to buy. It takes sellers to bring price down. So if I must buy, I will need a confirmation. Something has to inform me that buyers are already in and there is a strength to continue the buy. So I get these rejections from this candle and this bullish candle that engulfed the previous one. And here I am, and here is my stop loss. That is how I get into this particular trade. Remember, and I said on the H1, there are liquidity because of this equal high. this equal high at that upside. Due to this equal high, I know that there is a liquidity sitting there. It was the confidence of that liquidity, and I'm expecting price to take the liquidity, that beat my confidence to come to a 15-minute time frame and find this particular entry. So I have my entry trigger confirmation with a candlestick. Please understand the concept of candlestick first before you dive into any trade. Price can just pull back to your zone, but the fact that price return to your order block, you must note this. Remember, price did not return to your point of interest by accident. It takes the action of sellers to bring this price back from where it is into this zone. So if this price will continue buying, it simply means that it will need an action, a force, a presence of buyer for price to continue to go up. And the only way you can validate the presence of this buyer is by you getting a bullish signal. And this bullish signal can only be confirmed using a candlestick. And that is why you must get a candlestick validation. Let the candlestick show you the presence. You know, this is a visual market. We don't get to see the participant, but we can see the action of those participants based on our understanding of candlestick. So ensure to get this understanding. Let the candlestick play out. Give you a bullish candle for you to know that buyers are now in the market, and you can now make your decision. That doesn't guarantee that price will play out in your favor, but by and large, you are not making entry blindly. You are making it based on the consolidation. You are not just making the entry because your CCI is at the level of 20 and 10, but you are making the entry because you have a candlestick validation that triggers that move from that point of interest. So that is just how it works. So this pin bar pulling back into this zone is a validation. It is until you have seen the pin bar from a trend line, from an order block zone, you saw this pin bar. That is what now will lead you further to say, okay, let me consider where is my CCI. CCI is crossing from the level of 20 and 10. But not because price pulled back to your OB, which is your order block, you now go and look at your CCI and buy. No. You need a bullish price action to continue in that direction. There are several other means of validating this trade, but for this particular examples and scenario, this is what we are working with: the candlestick pattern, the pin bar, and the presence of buyers with the rejection in the market. I believe you find this video helpful. Please do not forget to give this video a like, subscribe, like and share. Turn on your notification bell so you'll be the first to get notified when we upload our next video. In the subsequent video, I'm going to simplify price action for you, and I'm going to explain it with a combination of CCI, how you can find entry around your trend line zone. And I know that video is going to be of a great benefit to your trading career this year 2025. So see you in the subsequent video.